Good morning, everybody. Good morning, all you magnificent melonheads of the world. Today is Wednesday, October 23rd, 2024. And the top story this morning, date night is dead. Okay, maybe that's a little bit extreme. Maybe I went a little over the top with that. But date night is dead. All you hopeless romantics out there who don your best New Balance sneakers and then take the little old lady out for a big slam breakfast at Denny's once a month for date night. Apparently, a lot of you guys are cutting back, and it shows in the numbers this morning. We got earnings from a bunch of popular restaurant chains, as well as Coca-Cola, which does a lot of business at restaurants, and they're all telling a very similar story here. Americans are eating out less. Not just Americans, stores in other countries are also doing well, or not doing very well. Guys, the cost of living went up. People's wages didn't go up as much. We can't afford to eat out as much anymore. That's the case. That's what's happening. I mean, we're told over and over again, best economy ever, soft landing, the tree in the nest, unicorns and rainbows. I don't know what's wrong with you guys. Go to the restaurant and eat. CNBC is telling you you're fine. What's up with your bills, guys? Apparently, it's not all unicorns and rainbows as they're telling us. So let's talk about some of the companies that reported today. Starbucks came in. Absolutely horrible same-store sales numbers from Starbucks. Not just in the U.S., also very much sharp declines in China. Not sure what's going on at Starbucks there, guys, but that's like your quintessential, Graham Stephan become a millionaire by not having coffee at Starbucks, like that cliche thing. It's kind of like it's the ultimate discretionary item, that second cup of coffee that costs you freaking $6 or whatever the heck a venti goes for at Starbucks now. I never go there, so I couldn't tell you. But Starbucks is really hurting here. Terrible same-store sales number. That stock is down today. Also, they withdrew their guidance for the year, so they're telling us things are probably not done getting worse. We also got Denny's is closing 150 restaurants. That's about 10% of all the Denny's in the country. They're shutting down after reporting a decline in same-store sales. I guess I don't know, guys. Denny's, I can't really give you any informed commentary on Denny's. I don't even see them very much. I mean, unless you're staying at a Best Western, you probably don't eat at Denny's anyway. Apparently, Mish was telling me La Quinta today. The big running joke in the South is that La Quinta is Spanish for next to Denny's. Okay, I guess that's a thing. Anyways, Denny's not doing very good. That stock is hurting this morning. We also got Coca-Cola with a very 2024 kind of headline today. Stop me if you've heard this one. Declining sales offset by higher prices. Have you guys heard that before? Fewer volumes, they raise their prices, and they sell less stuff, which means companies are still having trouble passing on the cost of inflation to consumers. The solution to higher prices being higher prices. But don't worry, guys. Remember, the government is already working on that next wave of inflation by shifting into easing policy mode, dovish central banks around the world. By the way, has anybody looked at the Japanese yen recently? We're pushing 153 yen to the dollar this morning. I don't know what's going on, but it sure as heck looks like Wall Street is piling on those yen carry trades again after that August 5th massacre. You think they learned their lesson? Nope. These gluttons cannot help themselves. So the yen continues to fall against the dollar as central banks are in dovish mode. It's hurting the restaurants big time as, the prior inflation caused by the central banks has now caused consumers to not have enough money to eat out. And of course, rounding out the list is an E-coli outbreak at McDonald's. We'll talk a little bit about that one. I don't think it's anything too alarming there. It's a relatively small E-coli outbreak, although it doesn't really matter how big it is to the people that are directly affected by it. But it is affecting McDonald's stock, and that rounds out the morning rather nicely as all those restaurant earnings have come in pretty bad. Also, we got mortgage rates out this morning. Mortgage rates are up. Applications are down again. Refis are down again. The housing market remains frozen solid. Han Solo in carbonite, guys. There's just houses just aren't moving. But still, stubbornly, neither are prices. Prices just will not move. Nobody's buying. Nobody's selling. There's no volume. There's no inventory. What is going on in the housing market? Also, another one interesting today, AT&T reported earnings. And it's not so much the AT&T earnings that I'm focusing on. They were good. They added more subscribers. It looks like the bundling of their fiber internet and their wireless plans is working pretty well. They added a lot of subscribers. So AT&T stock is doing all right this morning. But all of that subscriber growth is masking what they described as a decline in phone upgrades, fewer equipment sales revenues. Guys, we saw that yesterday with Verizon. The same thing. People are not upgrading their phones. Pay attention, Apple shareholders. That's another data point that says the iPhone 16 is a dud. We've seen mixed news on this one. We've had a couple of different analysts reporting channel checks. One guy saying they're down 15%. Another guy saying it looks like they're up 20%. I'll be honest with you, I'm less inclined to believe contradictory analyst notes, but when I see Verizon and AT&T both telling us people are not upgrading their phones, that tells me the iPhone 16 is a dud. And is it any surprise the big selling point, Apple Intelligence, doesn't work? It's like, buy this phone and then we'll tell you later what it's going to be able to do and how awesome it's going to be. That's a bold move, Cotton. We'll see if that plays out for him. Also, we got Deutsche Bank reporting today, raising provisions for credit losses while once again declaring the bottom is in for commercial real estate. Stop me if you've heard that one before. And we've got a spat between Qualcomm and Arm Holdings. There's a big licensing dispute going on in the semiconductor industry. Those are two pretty big names. Both of them are down on this news. I don't think this is anything terrible to worry about. I think it's more of strong arm negotiating tactics between the two companies. But Qualcomm is certainly no stranger to big legal disputes. That's something to pay attention to, as well as that could affect the semiconductor sector today. We got a lot to talk about. Why don't we shrink my big melon of a head and let's see what's going on in markets. Don't forget that like button for the YouTube algorithm. And if you're new here, hit that subscribe button because we do this every morning. So come and have your coffee with the melon heads. And going through markets today, it looks like the S&P is down about 20 points, a third of 1% lower ahead of the opening bell. We've got the Dow following suit, down even more, about 0.56% lower, off by 240 points ahead of the open. And the NASDAQ is also lower by 0.44%, or about 90 points in the red this morning. So we got stocks down across the board. We've also got a strengthening dollar once again. Pay attention to the DXY, guys. We're seeing this quite a bit here, even as asset prices rise pretty much across the board today, notwithstanding. We've been seeing the dollar strengthen for the last couple of weeks. But again, this is the dollar against other currencies, not necessarily the dollar against stuff and things. 104.48 on the DXY, up another 40 basis points today. And guys, speaking of the DXY, pay attention to this one. I mentioned it in the monologue. Look at the Japanese yen, 153.01, and it is falling dramatically today. Remember, guys, when you see this chart moving up, this is USD JPY, the number of yen it takes to make a dollar. So when you see this chart moving up, that is the yen losing value. And I went and looked, guys. I didn't really see any news from the Bank of Japan or any stories about the Japanese economy that would explain this big move in the yen today. I don't know what per se is going on there, but I can tell you, ever since September, look at the weakening of the yen. I mean, we had that mayhem on August 5th, that one morning bloodbath when everybody was talking about the yen carry trade. It continued to weaken for a couple of days after that. But then, of course, we rebounded in mid-September, and the yen has done nothing but fall ever since. The Japanese central bank is supposed to be the only one in the world that is in hawkish mode right now, and you'd never guess by looking at their currency because it is just bleeding out here. Yeah, there it is, 153 to the dollar for the Japanese yen. So not looking so hot here, guys. Also going on this morning, we have got the yields in U.S. Treasuries are up once again. People continue to dump U.S. Treasury bonds. The 30-year Treasury, 4.525. That's up another 3 basis points today. The 10-year, 4.246, up almost 4 points. The 2 is at 4.052. That's up 1.5 points. And the 1 month is at 4.761, up a fraction of 1 basis point. Also worth pointing out, guys, that the 10-year is about to flip the 1 year here. We've got 4.248 on the 10, and the 1 year's at 4.27. So certain portions of the yield curve remain inverted here still, guys. The 1 month is still higher than the 30-year. So the bond market is still pretty much a mess. Yields are rising. Gold is rising. Make it make sense. We've got gold. Well, it's me and my big mouth. I did mention gold was rising a second ago. Well, nope, not anymore. Gold finally taking a break here. Spot gold is at $2,739.80. That's down about $9 or a third of 1% today. And silver is down 2% here at 34.12, down 73 cents. So metals are finally taking a break. They've been on a monster run lately. I'm not surprised to see it taking a breather here. Not sure if this is a reversal or just a little bit of consolidation. We've got the other metals are down as well. Copper's down 1.2%. Palladium is down about 1.1%. Platinum is down about 0.6%. And crude oil is off by 1.25% today here, down 90 cents, trading at $70.86 for December WTI futures. Looking over at Bitcoin, we've got Bitcoin is down quite a bit this morning. $66,385 is priced on Coinbase. That's down almost $1,000 from yesterday. We were mentioning this yesterday, guys. We broke out of this bear flag just a couple of days ago, and now it looks like we're going to come back and retest. Watch that roughly $65,000 level, looking for a bounce there and then a move higher. That would confirm the breakout from this bull flag pattern that we've been in since the initial enthusiasm of the ETFs being legalized wore off. All right, now let's talk about some of these restaurant stocks because these things are getting bludgeoned this morning. Starbucks shares slide after coffee chain says sales fell again and suspends their outlook. Starbucks on Tuesday posted preliminary quarterly results that showed its sales fell again as the coffee chain tries to execute a turnaround. Our fourth quarter performance makes it clear that we need to fundamentally change our strategy so we can get back to growth, and that's exactly what we're doing with our Back to Starbucks plan, CEO Brian Nichols said in a statement. Yeah, that's a catchy phrase you got there. We'll see if it makes people go back and spend too much money on overpriced coffee. But here's what I want to draw your attention to: the slumping sales. For the third consecutive quarter, Starbucks same-store sales fell. This quarter's 7% decline in same-store sales was the company's steepest drop since the COVID-19 pandemic. Guys, in the restaurant business, 7% decline in same-store sales. That is a death sentence. Things aren't just bad at Starbucks. They are terrible. The company blamed its soft sales on weaker demand in North America. In its home market, its same-store sales decreased by 6%. Traffic tumbled 10% despite increased investments in the business, such as more frequent promotions in its mobile app and an expanded range of product offerings. Yeah, the more promotions on the mobile app. I don't know about you guys. You ever get a push notification on your phone and say, well, let me run out and buy $4 coffee because of that? I don't quite follow how the mobile app is driving sales, but okay. In China, its second largest market, same-store sales plummeted by 14%. And Starbucks' growth plan for the last several decades has been centered around China, so that is a very bad indicator for the company as well. The company attributed the decline to competition in the country, which it said is altering consumer behavior and changing the company's strategy for the market. The company also suspended its 2025 outlook, citing the recent CEO transition and the current state of the business. That's a big red flag there. But despite the dismal quarter, the company increased its dividend from 57 cents to 61 cents a share. So it's not all bad news this morning, but Starbucks stock not doing so hot here, down 3.85% ahead of the opening bell, trading at $93.09. That's down $3.73 a share. Denny's is also having bad news this morning. Denny's plots 150 closings as part of its growth strategy. We just got done talking about Sherry's in Oregon that's closing all of their stores in the state. Now we got Denny's closing another 150 restaurants. There's probably somewhere between 2,000 and 3,000 jobs going away when this happens. Denny's needs to close about a tenth of its stores before it can fully harness a comprehensive comeback plan that's yielded encouraging early results. Management informed Wall Street during the 71-year-old chain's investors conference on Tuesday. Executives said they tagged about 150 stores whose weak financial performance is sapping the whole system's vitality. About half of those units will be shut by the end of this year, with the rest slated to fire down their grills for good in 2025. We believe this is absolutely the right thing to do to make our system stronger, said CEO Kelly Valade in the opening of a day-long meeting with investors. She spoke after the franchisor reported a 0.1% decrease in same-store sales for the Denny's brand in the third quarter. Included in the results was an indication that Denny's franchisees shut 18 units during the period, leaving the 1,590 unit system 53 restaurants smaller than it was at the end of the year-ago quarter. So Denny's closing more stores, more jobs going away, same-store sales declining. It's the best economy ever. Denny stock is down 1.28% ahead of the opening bell, trading at $5.40. Coca-Cola is also getting in on it. And remember, guys, Coca-Cola gets a lot of their sales from restaurants as well. So this is another indicator that the health of the consumer and people are just eating out less. Coca-Cola tops earnings estimates as higher prices offset sluggish demand. Remember, the solution to high prices is high prices. Coca-Cola on Wednesday reported quarterly earnings and revenue that topped analysts' expectations thanks to a boost from higher prices that offset sluggish demand, but shares of the company fell 2% in pre-market trading. Globally, volume for Coke's sparkling soft drinks like Sprite and for its namesake soda were both flat for the quarter. See what they did there? Sales for soda flat for the quarter. Yeah. The company's juice, dairy, and plant-based beverage division, gross plant-based beverages, reported a 3% decline in volume. Its water, sports, coffee, and tea segments saw volume fall 4%, fueled by a 6% drop in bottled water. Coke said, though, that its pricing rose by 10%. Roughly 4% of that increase comes from markets experiencing intense inflation like Argentina, while the rest is the result of price hikes and customers trading up to pricier options. So we've got price hikes, prices being risen, customers pushing back, buying less of it, less volume. Guys, not a good indicator. I mean, Coca-Cola not doing terrible here this morning. Stock's down 2.38% on this news. But price hikes can only cover up volume declines for so long. Sooner or later, the consumer pushes back, and we're already seeing that with Coca-Cola trading at $67.80 here, down $1.65 this morning. And rounding things out nicely, not really a macroeconomic trend, but also bad news for the restaurant industry. We've got an E-coli outbreak at McDonald's, poses a risk for the chain and customers. It's not so much a big public health emergency, guys. This used to be very common. We actually do a much better job keeping an eye on this kind of stuff now, but this is very bad for a stock. Remember what this did to, what was the company? Chipotle Grill got absolutely hammered by an E. coli outbreak a couple of years ago. So pay attention to this one. McDonald's shareholders. McDonald's just became the latest fast food restaurant to be linked to E. coli. Such events can be damaging for companies, but especially devastating to the people who get sick. Let's see if we can. I had my paragraphs highlighted, but I lost it here. Here we go. On Tuesday, federal health officials said the fast food chain's quarter pounders were connected to an outbreak in the U.S. that sickened 49 people, mainly in Colorado and Nebraska, killing one. McDonald's says the source of some of the illness may be linked to slivered onions used in the burgers and sourced by a single supplier. Among other steps, it has paused distribution of onions in the affected areas and temporarily removed the quarter pounder from restaurants in several states. We take food safety extremely seriously, and it's the right thing to do, said Cesar Pena, McDonald's North American Chief Supply Chain Officer. Such events can have a real business impact on restaurants. When an E. coli outbreak was linked to Mexican chain Chipotle in 2015, the company temporarily closed all 43 of its restaurants in Oregon and Washington to try to identify the source and sanitize the spaces, and saw a big drop in profits. And people are thinking of that Chipotle fiasco with McDonald's stock yesterday, because this broke yesterday afternoon. The stock is down 6.73% ahead of the opening today, off by $21.18, trading at $293.51 there. Bad day for McDonald's stock here. Again, I don't think this is like a big major public health emergency. This is more a story for the stock. This is probably going to hurt McDonald's for a couple of days. And shifting gears now from restaurants to mortgages. We got mortgage data again, and it's more of the same here. Mortgage applications in the U.S. sank by 6.7% from the previous week in the third week of October. That is the fourth consecutive contraction and extending the 17% plunge from the earlier period. The aggressive decline in the volume of mortgage applications was in line with the sharp increase in benchmark interest rates since the start of the month, as a series of strong economic data drove markets to expect a less dovish Federal Reserve next year and lifted yields for long-dated treasuries. Applications to refinance a home loan, which are more sensitive to short-term changes in borrowing costs, fell by 8.5% from the previous week to extend the 26% plunge from the earlier period. Additionally, applications for a mortgage to purchase a new home fell by over 5%. So you can see here applications down 4 weeks in a row. And the reason for that is interest rates. The average contract interest rate for a 30-year fixed rate mortgage with conforming loan balances in the U.S. was steady at 6.52% for the week ended October 18th, hovering at about 2-month highs, according to the Mortgage Bankers Association. You can see that here, 6.52%. We're well off the lows that we saw in September. Now, the other important thing to mention here, guys, is that this is for the week ending October 18th. It is now October 23rd, and interest rates have done nothing but rise since the 18th. So we're probably looking at more bad mortgage data next week when this gets reported. The housing market continues to be a rather chilled environment. So bundle up if you're waddling out into the housing market. And also going on this morning, AT&T exceeds wireless subscriber estimates on demand for premium plans. Good news for AT&T with some bad news for Apple sprinkled inside this article here. AT&T gained more wireless subscribers than expected in the third quarter, driven by the steady adoption of its higher-tier unlimited plans that come with perks, including increased hotspot data, sending its shares up 3.1% in pre-market trading. The U.S. telecom firm said on Wednesday that it added 403,000 net monthly bill-paying wireless phone subscribers in July. That's above estimates of 393,400. So adding a lot of subscribers, very good news for AT&T. The stock is doing very well because of it. But here is the thing. Revenue of the $30.2 billion missed estimates for $30.44 billion, according to data compiled by LSE&G, as the company's mobility equipment sales took a hit from lower phone upgrade volumes. Pay attention, guys. Pay attention, Apple shareholders. Rival Verizon also reported a quarterly revenue miss on Tuesday due to a lull in phone upgrades. What does that tell you about the iPhone 16, about the much-hyped super cycle and Apple Intelligence? You've got the two biggest mobile carriers, AT&T and Verizon, both saying people are not upgrading their phones. Pay attention, guys. Apple iPhone 16 so far is not really selling, it looks like. Now, maybe when Apple Intelligence functionality is finally rolled out as part of a software update, maybe that will change. But for now, it isn't. AT&T stock, though, doing pretty good after all of those subscriber additions, trading at $21.75. That's up 1.16% this morning. We also got news from Deutsche Bank here. A bad debt outlook deteriorates for the second time. They're setting aside more money for people not paying them back because it's the best economy ever, right? Deutsche Bank said it will have to set aside more money than expected for souring debt. The second time this year, it had to adjust its guidance. Germany's largest lender on Thursday reported a 42% increase in third quarter profit, helped by gains in the investment bank and in asset management. So the rich are doing very well, but lower revenue in the main lending units and a doubling of credit provisions from a year ago weighed on the results. So how do you interpret that? More investment banking, more trading and investment going on, but people aren't paying us back. That latter part seems kind of important there, guys. Chief Financial Officer James von Moltke said on a call that the higher credit provisions in the third quarter mainly reflected the impact of Deutsche Bank's integration of retailer lender Postbank, which had led to a backlog of collections and a change in models. We believe this is only a transitory increase. Oh my God, somebody just said transitory in 2024 in a serious context? I kid you not, guys. There it is. Transitory. Oh, man, I don't have my whiskey bottle here. We're supposed to drink every time somebody says transitory. Do we have to dust that one off? Good God. Did that get lost in translation maybe? Did he mean to say temporary and the translator just decided to throw transitory in there? I hope nobody is saying transitory in 2024. Good God. Anyways, we believe this is only a transitory increase, especially as our risks in commercial real estate financing are now receding and forward indicators are healthy. Oh, somebody else calling a bottom in commercial real estate while saying it's only transitory. What's the worst thing that could happen? It's the 2020s. Don't answer that. Sewing said that in a message to employees. So Deutsche Bank stock, it's doing all right this morning. All things considered, down 0.8%, considering a big spike in loan loss provisions. But all the other indicators for the bank were pretty good. $17.43 for Deutsche Bank shares here in the U.S. And the last one I want to talk about today is this little spat between the semiconductor players. We got two big semi companies are not playing nice in the sandbox. ARM to scrap Qualcomm chip design license in feud escalation. ARM Holdings is canceling a license that allowed longtime partner Qualcomm to use ARM's intellectual property to design chips, escalating a legal dispute over vital smartphone technology. ARM, based in the UK, has given Qualcomm a mandated 60-day notice of cancellation of their so-called architectural license agreement. According to a document seen by Bloomberg, the contract allows Qualcomm to create its own chips based on standards owned by ARM. The showdown threatens to roil the smartphone and personal computer markets, as well as disrupting the finances and operations of two of the most influential companies in the semiconductor industry. Qualcomm sells hundreds of millions of processors annually, technology used in the majority of Android smartphones. If cancellation takes effect, the company might have to stop selling products that account for much of its roughly $39 billion in revenue or face claims for massive damages. Both companies are paying the price for this dispute this morning. Reminder, guys, this doesn't go into effect right away. This is like a 60-day warning, so this could just be a strong-arm negotiating tactic. But right now, Qualcomm is down 1.65%, trading at $170.32. And ARM is down 3.4%, trading at $147.35. So both companies' shares are paying the price for this legal spat here. We'll see what develops out of that, if anything. And I just want to say thank you so much to Jerome Powell. Well, thank you so much, Mr. Chairman. I didn't know you were a fan. By the way, good luck returning inflation to your arbitrary 2% target while maintaining maximum employment. I hope your quantitative easing and tightening and zerp and burring goes very well, sir. But thank you for the support of the channel. Please stop debasing my currency. This is a good time to mention that I like the shiny, guys. Thank you very much, Jerome Powell, laughably named. Appreciate the super chat, sir. And thank you, Mighty Mike 53. Gold 2,800. Might be getting a little bit ahead of ourselves there, Mike. Not quite 2,800 yet, but I love the enthusiasm. 10-year crashing to 4.24. Dixie up. What's your take? Is something about to break? Mike, I got to tell you, I am very surprised that something has not broken yet. All right. So is something about to break? You got phrases like that are becoming almost cliche at this point. I can tell you the shady things like the Treasury buybacks, like the Federal Reserve doing quantitative tightening, but within that quantitative tightening, actually increasing their total holdings of long duration Treasury bonds. So there's a lot of shady things going on beneath the surface that are actually adding liquidity to the system, even as they tell us they're being restrictive. So that's probably why things haven't broken yet, all the while the average person paying the price for that as inflation stuck around longer and got worse than it had to because of those policies. That being said, there was two very important stories over the last couple of days. There was an article about Stan Druckenmiller going short U.S. Treasuries, and he's short in a big way. Apparently 15 to 20% of his whole portfolio is short U.S. Treasuries. Now, we don't know what form that takes, what product or instrument he's using to short. We don't know anything about the time horizon of that, but it's a good bet it's long duration stuff like the 10s, 20s, and 30s that he's short. So that's one. Stan Druckenmiller, that's a pretty big name. And then yesterday we had Paul Tudor Jones was on CNBC talking about how the U.S. fiscal situation is such a mess. And we're not talking about it right now because politics is a circus. And right now, both candidates are out there trying to buy votes with promises they can't keep. But whoever wins the election is going to have to deal with this freaking mess. The debt ceiling is coming back again. And right now, the plan is for just a tidal wave of Treasury issuance. The bond market is going to have to rectify that. And so Paul Tudor Jones is saying how he is bearish on U.S. government debt and how he was long Bitcoin, long gold. So, I think stories like that explains why gold is rising while people are selling U.S. debt and while the dollar is becoming more valuable relative to other currencies. I think it's got a lot to do with the U.S. fiscal mess. The bond market is starting to sniff it out, although nobody wants to really talk about it other than those two individuals. Whoever comes out on top in November is going to have to deal with this mess, and it is going to be a freaking circus. Thank you very much, Mighty Mike. I appreciate the super chat, sir. And thank you to the Pasta Man who says date night is a Sade record and pizza. What's a Sadie record? I don't know. Am I showing my age here, Pasta Man? I don't know what a Sadie record is, to be honest with you. I'm sorry. Sorry, brother. I don't listen to much hip-hop. I don't know what that even means. And a pizza. You romantic fool there. Don't forget the candlelight while you're having your Sadie or your Sade record. I don't know. I'm going to get some okay boomer comments today for this one. Gen X, thank you very much. But hey, man, romantic comes in all shapes and sizes. You do you, brother. Me, it's the New Balance shoes and a big slam at Denny's. That's date night for me. Thank you, Pasta Man. Appreciate the super chat and the support of the channel. Aunt Janet's wig. What's going on, Wes? He says, as a nutrition coach and a personal trainer, I'd like to see how much of out-to-eat spending decline is from inflation and then from healthier choices. You know, you made a good point there. There's the Ozempic effect. I've seen a lot of people talk about that, especially in the context of declining sales of sugary drinks and soda. I don't know that that's playing a role in the restaurant sales. It could be affecting Coca-Cola sales there. Is it really healthier choices? I don't really see the population getting healthier. I don't know if that's something you'd really be able to trend using macro data or anything like that. But yeah, I'd be interested to see, are people just living healthier lives? I doubt it. I'm willing to bet, Wes, that it's got much more to do with economics, with just less discretionary income. After you pay the rent, the utilities, and the groceries, there's just not enough left over. You still got to, put clothes on the kids. You still got to put gas in the car. And so date night takes the hit. I believe that is the cause there, but that is an interesting question. And thank you very much, Wes, for the super chat and support of the channel. Thank you, Becky Heffernan, who says, Jack, thanks for all you do for us. You're awesome. No, Becky, you're awesome. Thank you so much for watching and for being a Melonhead member for 5 months. I appreciate the support of the channel and the kind words. Thank you very much, Becky. And New Engineering, what's going on, brother? He says, Jesus guides, you help navigate. Thank you. Okay, I am happy to be part of your spiritual compass, sir. Thank you very much for the good vibes and good word. I appreciate that very much. And thank you also to Mr. Inflation Situation. What's going on, TIS? He says, ever wonder at what point extend and pretend becomes criminal? Thanks for the great news and commentary. What private equity and private credit has been doing, the way they've been avoiding price discovery via extend and pretend, I don't know if it's criminal. I don't know if it's illegal. I'm sure a good enough lawyer, a good enough prosecutor can find something illegal in there. I can tell you it sure as hell is unethical, and it's definitely not good for their clients and not good for their investors, especially when they're out there assuring us that everything is okay while trying to raise capital for their new funds that are going to be even better, that are all holding the same garbage. Is it criminal? I'm going to withhold judgment on that one. I can't really weigh in on that, but it sure as hell is unethical, TIS. Thank you, sir, for the super chat and the support of the channel. And thank you to Mr. P. Nice, who says, transitory economy, adjectives strong and resilient. Don't make me dust off my Janet. Oh, my God. Yes, Secretary Yellen would like to remind everybody that Deutsche Bank is very strong and resilient and well capitalized. And don't worry about those poor people in Oklahoma that the FDIC just screwed over. And that the fact that I dodged that question from Senator Lankford last year, I just don't care about people in flyover country. I serve the big banks and I serve big tech. Oh, thank you so much, Secretary Yellen, for that honesty there. Senator Lankford did question you a year ago, Secretary Yellen, about those small rural banks in Oklahoma. And, well, predictably, you hung those people out to dry. That's interesting. I'm not saying the bank should have been bailed out, but maybe you shouldn't have bailed out the tech titans in Silicon Valley and the private equity investors and the Chinese investors in Silicon Valley Bank. Maybe you shouldn't have bailed them out either. But you know what? No sense Monday morning quarterbacking that decision. We'll have plenty of years to talk about how unfair that was. And thank you to Mr. BTB. I'm not going to pronounce that one. Is B of A about to fail? I don't think B of A is about to fail. Let me rephrase that. B of A won't fail. The government won't let them. Are they about to? This is where people like point at you and shout, fearmonger, doomer, this and that. Bank of America has a huge pile of unrealized losses on U.S. Treasuries. They made a big wrong way bet on interest rates in 2021, 2022. Now, that big pile of losses is not as big as it was a year ago because interest rates have come down a little bit, so those bonds went back up in value. So Bank of America still has a big problem, but I don't think there's not that run on deposits going on at Bank of America. So without a run on deposits, that big pile of unrealized losses will stay unrealized. It doesn't become a problem until they need to sell those assets to raise the cash to meet the withdrawals. So the run isn't happening on Bank of America. So I don't think Bank of America is about to fail, but that doesn't mean there aren't problems there. I'm also hearing that Bank of America is massively short precious metals. I don't have access to the data behind that. So, there's other people who follow that more closely than I do. B of A's got their share of problems, but I don't think they're about to fail. And even if they were, the Fed would absolutely evoke the systemic risk exception, declare them too big to fail. I mean, guys, they bailed out Heartland Tri-State Bank in Kansas with $113 million in deposits. They bailed out Republic First Bank in Pennsylvania. I think that was like a $16 billion bank. What's the total assets under management at Bank of America? It's got to be like close to $1 trillion. Bank of America, total assets. I'm guessing this is $1 trillion. 2.5 trillion in total assets at Bank of America. At least that's what Google spits out. You got to take that with a grain of salt. So no, I don't think Bank of America is about to fail. And even if they were, the government won't let them fail. But of course, that just means they'll debase your currency in order to prevent that from happening, which is why I like the shiny. Thank you very much, BTB, a.k.a. Sam Bankman-Fried, munching on a cucumber. Appreciate the super chat and the support of the channel. And thank you, everybody, for having your coffee with the Melonheads today. I appreciate that very much. Thank you for all the super chats and support of the channel, guys, as well as to you magnanimous Melonheads on Patreon and YouTube memberships. I appreciate the support, guys. Looking forward to talking to you at 6 p.m. tonight on our weekly Zoom get-together. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till tomorrow, live small and dream big.